One of the names that we've been very bullish on for quite some time is actually Lennar Corp. And one of the reasons we've been most bullish on them alongside Pulte Group is the fact that Lennar, they were kind of the original alpha architect of something called the mortgage rate buy down, which has now become an industry standard.
Welcome back. There's great demand for housing in this country, and in this moment you see investment opportunities, David. What's driving the category and where are the opportunities?
Yeah, I've kind of been the contrarian here for quite some time, Merrill, especially on the home builders. We've been pretty bullish on home builders actually going back to May of 2022, which basically was, and no one was for home builders at the time. I mean, you just had the Fed at that point start raising rates, start doing a lot of quantitative tightening, which they really thought was going to impact the whole entire macro scenario for home builders. But we took the contrarian stance because a lot of these names were actually trading at half, 50% of their book value. And historically, especially if you go back to the financial crisis, that was actually a great valuation to really start buying these names. But I think we've been very surprised by the continued strength within margins and the continued strength within sales. And I actually do not think that it's going to stop anytime soon. And why is that? It tends to be more of a macro view, and I tend to be more fundamental personally. But if you look at the macro picture, the resale inventory market right now of homes just last week is down 21% year over year. And that tends to be in a very, very strong seasonal type of time period for the resale market itself. But yet a lot of these home builders, since there's no inventory on the resale side, have been getting a lot of interest from actually people who are trying to build homes. And one of the names that we've been very bullish on for quite some time is actually Lennar Corp. And one of the reasons we've been most bullish on them alongside Pulte Group is the fact that Lennar, they were kind of the original alpha architect of something called the mortgage rate buy down, which has now become an industry standard. And what is that? Well, we know that right now the 30-year mortgage rates is about 7% here in the United States. They are able to buy down that mortgage to about 4.5%, 5%. And in my mind, that creates some type of competitive moat for a few reasons. Well, one, there's no resale market inventory out there right now. But two, if you get a mortgage rate of 4.5%, 5% relative to 7% in the open market, you're probably going to do that. And you're probably going to be building a new home here in the near term just because you're saving a lot of the money on your mortgage rate over longer periods of time. So we've been very bullish on this name. They may be trading closer to 1.5 times book right now, very much about one turn higher than where they were about a year ago. But I think the runway for growth for them moving forward remains very strong.
And you're also very focused on healthcare and a particular company there, United, which you have a great respect for. Tell us that scenario as well.
Yeah, it's a very, very well-run company. And if you look at, the home builders, there's more of a macro thesis for that type of name. If you look at UNH, it's going to be more of a strict fundamental story right now. And what I tend to say, especially with very strong run, high-quality companies, price is what you pay, value is what you get. So I'm willing to pay what I would consider a slight premium valuation for some type of stock. But right now, UNH is actually trading at a 10% discount to the S&P 500, when it's historically traded at about a 20% premium. If you do some type of sum of the parts analysis on the name, I think you get a valuation premium to the market closer to 35%. So right now, you have a company, what I would consider to be trading at a very discounted valuation, but you have a long runway for growth, not just in the near term with the United Healthcare Corp, but also on the Optum side of the business. And there's kind of a call option right now, catalyst for this name, to look for kind of their third leg of the stool for growth really moving forward in the future. And I think that actually can be in the AI space. They have such a bailiwick and connection with a lot of the home healthcare providers. They have so much data on the Optum side that through AI, I actually believe that they can reduce costs and increase volume, which is going to create a very efficient company from a growth perspective. I mean, Optum itself, which is kind of the growth driver for the stock, is growing at like a 16 to 19% EPS aspect, with the core business growing closer to 9-10% right now. You're getting a 3% higher growth business than the S&P 500 at a 10% discount. And if you believe that the market could be heading into some type of uncertainty right now from a macro perspective, well, this is a very defensive company in nature, and you're getting it at what I would consider to be a pretty hefty discount.
And I noticed that, in brief, United had a very big week the last week. What's going on there?
Yeah, they definitely did there. I think healthcare as a whole has kind of been getting a jump start here, but I think that the investor base right now is finally getting accustomed to their recent acquisition of Amedisys. AMED, they do a lot of home health and some hospice care companies, which they were a little skeptical at first from a valuation perspective, but from a macro perspective of healthcare running, and then investors getting really acknowledged to that story and whole has really led that company to run here recently.
David, thank you, and really appreciate you coming into New York. Thank you.
Hey, thanks so much, Merrill.
Dig in today's business headlines as well as the stories behind the news every day at QZ.com.